Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. We'll give you a little bit of a different look today here because we're sharing some resources at the same location. So usually we're here to join you at the same time. But Andrew will be here in a second to walk you through the technical side of the market as he always does. But let me jump right in. I've got a few topics for you this week. We're going to talk about rising continuing claims, and we're going to talk a little bit about AI and the potential impact we're seeing on the workforce. And Andrew will come in here and talk about corporate buybacks. So let's jump right in. Rising continued claims. So first, the background here. The Federal Reserve has two primary mandates. They have full employment and stable inflation, those two targets. And as we know, they've been fighting for years to get that inflation to a stabilized level. We continue to head towards it. They have a little bit of pause with uncertainty, knowing what the tariffs might or might not bring as we go through the third and the fourth quarter. The other side of that, the full employment, that's the one that where we've had a very solid, unquestionable, strong market for several years as we've been in this expansionary environment in the economy. We're going through a period here where there's a little bit more uncertainty. The jobs market we typically look at, the biggest numbers reported are the monthly non-farm payrolls that we get each month from the government, showing us how many jobs the economy added and what the unemployment rate is. And that's showing an economy that is still growing, but slowing somewhat. What we're looking at here is something that I think is more on the leading edge of the employment cycle. And we're looking at continuing claims. So these are people who have filed for unemployment claims and have stayed on there for a period for weeks. And what we're seeing is a level that is not concerning. The overall level here, we're still at a very reasonable low level of those who are unable to find a job, period. But what we're seeing is a change in the trajectory. We're seeing this go the wrong way. This is clearly something that the Federal Reserve would not want to see happen for too long before they jump in and cut rates. So as we speak now, the jobs reports that come out and the unemployment rate have the Fed almost all but certain not to cut in July. But more things that we see like this on continuing claims could put them closer to a position where they would come in and cut it in September. We will see how they view and how they balance an unemployment rate, which is staying low versus maybe crumbling signs on the leading edge of the employment cycle. So that's employment. One other, as we step back and take a look, this one really just kind of took me by surprise. We're showing the change in overall white-collar jobs on this next chart since 2021. And in general, although we've seen a strong labor market, we have seen those on the white-collar side of it, those between managers, executives, and the such are actually at a lower level than they were in 2021. So potentially AI is a big piece of this because that's the space where you would see those types of jobs reduce, where employers can do a lot more with a lot less. And so it'll be interesting to see how this dives as we really see over the past year, ChatGPT and the like become significantly better, how that impacts the labor force. Some big CEOs like Ford out really telling us and making bold statements about us really underestimating the transformation that is happening there. So as we study the labor market dynamics, this is very clearly one piece of it. So I want to pass the baton over to Andrew to cover corporate buybacks.
Thank you, Adam. So every week, we're always evaluating what is really moving the stock market. Is things being news driven? We're seeing a lot of buyers or sellers coming into the market. And one of the topics that we discussed in our allocation meeting this week was looking at some of the buyers that are coming into the market and also looking at the impact of tariffs. Now, as we come out of Q2, we recognize that a lot of companies in the first half of the year were very uncertain what the impact of the tariffs, the potential tariffs, and the outlook for the rest of the year would have on their businesses. We began to see that they began to lower guidance, they cut expectations, not really sure what their business would look like as these different headlines come out. And we began to see that they started to change the way slightly how they were using cash within their businesses. Instead of seeing a lot more investment in capital expenditures, in innovation, we're actually seeing a lot of companies, actually a new record number of companies, beginning to buy back their own stock. They're taking the money and they're starting to repurchase their shares, lowering the amount of float, the number of shares that are out in the market. And this buyback has been one of the big drivers to help push stocks higher. You can see this on the chart here. For the last 5 years, we've really seen an acceleration of these buyback programs as companies continue to buy back their stock, helping to push the stock prices higher and decrease, again, the number of shares available for the average investor. And so this is a really interesting development as we see companies begin to change and shift how they're using the money they have in their coffers. And right now we're seeing a record amount of buybacks. This has helped explain why we've really helped drive the market higher. We saw such a strong recovery out of those April lows. And part of that has been year to date, a new record in number of companies saying, hey, we're going to start buying back our shares. Again, pushing the stock prices higher. And we always want to be aware of what are some of the drivers for stocks going higher, if the market was going lower, driving it lower. And right now, we're really seeing a lot of impact from how corporates are acting and how they're one of the responses among many they're having to some of the tariff headlines. So I'll turn it back to Adam.
Thank you, Andrew. Well done, as always. And thank you to all of you for giving us your time. We truly appreciate it. As a reminder, whether we have the pleasure of serving you now or perhaps in the future, if we can be of service, please don't hesitate. Give us a call, 800-928-4001, or scan that QR code and do it electronically. Thanks again and have a great weekend.